On December 13, 2022, a Danish bank stood up in a federal courtroom in Manhattan and pleaded guilty to conspiracy to commit bank fraud. Before the day was over, it had agreed to pay more than $2 billion combined to American and Danish authorities. The crime did not happen in Copenhagen. It did not happen on Wall Street. It happened on one floor of one branch in Tallinn, the capital of Estonia. Between 2007 and 2015, something like 200 billion euros in payments moved through that single branch's non-resident accounts. Around 15,000 customers. 9.5 million individual payments in and out year after year. This was not the bank's main Danish business. This was a side desk, inside a subsidiary, inside a small former Soviet republic, and for the better part of 8 years, it ran almost entirely undetected by the people whose job it was to catch it. This is the story of how that happened, who tried to stop it, and why in the end, almost nobody who actually ran the branch ever spent a day in prison. This is Cooked Books. This is Danske Bank. Danske Bank was, for most of its history, exactly what it looked like. A large, conservative, unglamorous Danish retail bank. The kind that finances mortgages and small business loans and does not make headlines. In 2007, looking to expand across the Nordic and Baltic region, Danske bought a Finnish bank called Sampo Bank. It was a straightforward regional acquisition. Along with Sampo's branch network across Finland, Estonia, Latvia, and Lithuania, Danske inherited something it had not built, and for years barely seemed to notice it had bought: a small unit inside the Estonian branch, known internally as the non-resident portfolio. The name described exactly what it was: customers who did not live in Estonia, mostly from Russia and other former Soviet states, banking through accounts in Tallinn. Nothing about that is inherently illegal. International banks serve non-resident clients all the time. What made this desk different was how it behaved once it was left largely alone. Ivar Rehe led the Estonian branch from 2007, the year of the acquisition, through 2015, the exact years the non-resident business grew from a footnote into the branch's entire reason for existing. By 2013, according to the investigative journalism consortium ICIJ, that one small unit was generating around $52 million in profit in a single year. That was about 99% of the entire branch's profit. Almost the whole bank in Estonia was effectively one non-resident desk wearing a much bigger bank's name. Nobody at headquarters in Copenhagen appears to have asked, seriously, how a handful of bankers on one floor in Tallinn were making that kind of money. Here is how the money actually moved. The bulk of the non-resident accounts were not held by real operating businesses. According to ICIJ's FinCEN Files investigation, they were held overwhelmingly by shell partnerships registered in the United Kingdom, structures called LLPs and LPs, entities with no visible office, no visible product, and often no identifiable owner beyond a name on a registration form. ICIJ's reporting identified 3,267 of these UK-registered entities tied to suspicious activity reports connected to the case. More than half of them, over 1,600, were created by just 4 registration agencies. The largest single supplier, a firm called International Overseas Services, alone accounted for 646 of them, and some of that shell company plumbing was not even outsourced. Danske's own bankers in Estonia ran a secret in-house operation, registered in the Marshall Islands, that ICIJ identified by the name Beta Consult. It manufactured UK shell entities to order, complete with what ICIJ described as a coded invoice system, tying each sale back to the individual bank employee who made it. None of this stayed inside Estonia. To move dollars internationally, a bank needs a correspondent relationship with an American bank, and Danske's Estonian branch cleared an estimated 80 to 90% of its dollar flow through major U.S. correspondent banks in New York. That detail is not incidental. It is the entire reason the U.S. Department of Justice and the Securities and Exchange Commission eventually had jurisdiction at all. Every time, Danske told an American correspondent bank that its Estonian anti-money laundering controls were sound, and every time it processed a dollar transaction on the back of that assurance, it was, according to American prosecutors, committing fraud against a U.S. financial institution. About a quarter of the money flowing into the non-resident portfolio reportedly originated in Russia. Not most of it, not even a majority, but enough that one particular institution noticed early and said so. The first warning came from an unlikely source. Russia's own central bank flagged suspicious transactions and possible tax evasion tied to the Estonian branch to both Estonian and Danish financial supervisors, first in 2007, then again in 2013, according to a confidential document from the European Banking Authority. Both times, the warnings were, in the EU's own later assessment, largely ignored. The second warning came from inside the building. Howard Wilkinson, a British trader who ran Danske's markets desk covering Estonia, Latvia, and Lithuania, began flagging what looked like clear breaches of anti-money laundering procedure. Starting in December 2013 and running into 2014, he filed 4 separate written reports to Danske's own internal audit unit and to management in Copenhagen. Nobody shut the desk down. It was Estonia's own financial regulator, the Finance Inspection, that finally moved. In 2014, its examiners ran on-site inspections of the branch, and in September of that year, sent Danske a critical draft report, finalized that December. It took until July 2015 for the Estonian regulator to issue a formal supervisory order compelling Danske to unwind the non-resident business for good. The branch reportedly closed roughly 853 of the accounts that year as an initial step, ahead of the fuller exit. That is worth sitting with. The first outside warning arrived in 2007. The internal warnings arrived in 2013 and 2014. The order that actually forced a wind down did not land until the middle of 2015, 8 years from first flag to final closure, and even that closure happened quietly, years before the public ever heard the word Danske in this context. It is also worth keeping 2 regulators straight because the story blurs them constantly. The Estonian FSA was the one on the ground, running the inspections, issuing the order that actually ended the non-resident business. The Danish FSA, the group-level supervisor responsible for Danske Bank as a whole, was reviewed separately afterward in its own official report and found to have supervised inadequately. One regulator acted eventually. The other one, whose job was to be watching the whole bank, largely did not. Howard Wilkinson's 4 reports did not end his career quietly. In 2018, roughly 5 years after his first internal warning, his identity was leaked without his consent to an Estonian newspaper. By then, the wall of silence around the case had already started to crack, and Wilkinson stepped forward publicly rather than stay hidden. He testified before the Danish Parliament in December 2018. Weeks earlier, on November 21, 2018, he had appeared in Brussels before the European Parliament's Special Committee on Financial Crime, Tax Evasion and Tax Avoidance, known as Tax 3, to lay out in public exactly what he had told Copenhagen years before, in private, and been ignored. By the time the reporting caught up with the scale of it, One news organization put it plainly. Al Jazeera called it Europe's biggest scandal. Wilkinson was never charged with anything. He was the one person inside this entire affair whose job was to raise the alarm, and who did exactly that in writing 4 separate times, years before anyone outside the bank knew his name. Through 2017 and into 2018, the Danish newspaper Berlingske began publishing detailed reporting on the Estonian branch, and the pressure it created forced Danske's own hand. The bank commissioned an outside law firm, Brun and Hiele, to investigate itself. That report was published on September 19, 2018, and it confirmed the scale that had until then only been rumored. The same day it came out, Danske's group chief executive Thomas Borgen announced his resignation. 3 months later, in December 2018, Estonian police detained 10 former employees of the Danske Estonia branch, suspected of knowingly assisting money laundering. Among those named was Juri Kijajev, the former head of the branch's private and foreign banking unit. The company had admitted the scale of the problem. The chief executive was gone. Arrests were happening on the ground in Tallinn. What remained was the harder question, the one that would take years to even partially answer. Who, specifically, was responsible, and what would actually happen to them? One name from this story deserves to be told plainly and without embellishment. Ivar Rehe ran Danske Bank's Estonian branch from 2007 to 2015. The exact years the non-resident portfolio grew and then collapsed under scrutiny. He was, by any account, a key witness in the investigation that followed. He was never officially charged with any crime. On September 23, 2019, his family reported him missing. Police, volunteers, and search dogs searched near his home in Tallinn's Pirita district. 2 days later, on September 25, 2019, his body was found in his own garden. Police, prosecutors, and a forensic doctor all concluded the evidence pointed to suicide, with no signs of violence or accident involved. He had spent 8 years running the branch at the center of the scandal, and he died before facing a single formal charge over it. The facts end there. Nothing more is known, and nothing more needs to be guessed at. Estonia's financial regulator finished what it started. On February 19, 2019, it ordered Danske Bank to close the Tallinn branch entirely, giving the bank 8 months to wind the operation down. Liquidation formally began on October 1, 2019. The question of individual blame moved slower and went further and landed softer. In May 2019, Danish prosecutors charged former chief executive Thomas Borgen with violating Denmark's Financial Business Act, alleging negligence in his oversight of the bank. Charges were also brought against several other former executives. Almost 2 years later, in April 2021, Danish prosecutors dropped every one of those charges. Borgen, along with former chief financial officer Henrik Ramlau Hansen and former head of business banking Lars Mork, and the rest of the 9 former managers originally named, walked away with no criminal conviction. The prosecution's own stated reason was that there was insufficient evidence of negligence severe enough to be characterized as gross. Hold that separately from what came next, because the two are not the same case and should never be told as if they were. The dropped charges in 2021 were about individual men. What happened in December 2022 was about the company. On December 13, 2022, Danske Bank AS pleaded guilty in a United States federal court to a single count of conspiracy to commit bank fraud and agreed to a criminal forfeiture of approximately $2,059 billion to the Department of Justice. The same day, the Securities and Exchange Commission separately charged the bank with defrauding investors about the state of its Estonia compliance program, and Danske agreed to pay the SEC's own $413 million settlement on top of the DOJ forfeiture. Danish authorities acted too, separately fining the bank for violations of Denmark's anti-money laundering laws, covering conduct from late 2013 through early 2016, a combined penalty that press coverage put at roughly $672 million, described as the largest such penalty ever imposed in Denmark for money laundering-related conduct. Add those three headline figures together, and you pass $3 billion, but Danske Bank's own public statement described the total actually payable, combined, to both American and Danish authorities as approximately $2.06 billion, and that is the figure that recurs most consistently across independent reporting. Regulators never explained the gap in public. It is the kind of arithmetic that happens when several authorities stake overlapping claims on the same forfeited money. The safest, most honest way to say it. Danske Bank paid more than $2 billion combined to resolve the case with US and Danish authorities. The bank's board separately committed to donate an amount reportedly around 1.5 billion Danish kroner, roughly what the bank itself calculated it had earned from the suspicious portfolio, to a foundation fighting financial crime. And in February 2024, a Danish court delivered the harshest individual sentences to come out of the entire affair, not to an executive, but to two lower-level facilitators. Irene Ellert was sentenced to 9 years. Arūnas Masenas, a Lithuanian former electrician described in Danish press as a nominal company director installed to sign paperwork, received 7. So added up, plainly, the way this show always does. Roughly 200 billion euros moved through 15,000 accounts on one floor of one branch over 8 years. Russia's central bank warned regulators in 2007 and again in 2013. Danske's own internal trader warned Copenhagen 4 times, starting in December 2013. The regulator that actually acted, Estonia's, did not force a full shutdown until the middle of 2015. The public did not learn the scale of it until September 2018, the same day the chief executive resigned. What became of the people at the center of it? Thomas Borgen resigned the day the internal report came out, was charged 2.5 years later, and had every charge against him dropped in 2021 for insufficient evidence. Howard Wilkinson, the one man who did his job and warned everyone who would listen, was never charged with anything, having done nothing wrong in the first place. Ivar Rihe, who ran the branch through its worst years, died in his own garden in September 2019, having never been formally accused of a crime. The company itself paid the closest thing this story has to a real price, pleading guilty in a Manhattan courtroom and forfeiting more than $2 billion combined to American and Danish authorities. And the two harshest individual prison sentences in the entire scandal, 9 years and 7 years, went not to a chief executive or a chief financial officer, but to a facilitator and a man installed as a nominal director because somebody needed a name on the paperwork. The bank was punished, the branch was closed, the money is mostly still unaccounted for, and the people who actually ran the operation that moved it mostly walked away, except for the ones underneath them, and the one man who never got the chance to answer for anything at all. This has been Cooked Books. If you want more forensic files like this one, the archive is open.